All right, little quick market review straight off, get this off. Haven't looked at anything yet. We're just going to be breaking down what we're going to be looking for in the next upcoming week, and obviously everything depends. Like things happen overnight, just basic gauge on how we go about this. So first, I'm going to start off with the SMH because the SMH pretty much is a big indicator for the Nasdaq so far. So if we're going to take a look at, you know what, just delete all of this. Clearly, we're in a range for the SMH, okay? I don't know why my control button has not been working. So this was clearly a big level here that we closed below. This looks like Thursday. Yeah, market open was not open on Friday. Okay. So the first thing that we're going to do when we're looking at where, we're looking for inefficiencies in the market, which is not a fair value gap, we're going to talk about how to find inefficiencies. All right. First thing we're going to do, we can see that this is a range, okay? And the range pretty much ended right here. I'm just going to throw this on there. This little push up, this whole climb up was kind of like a fizzle out. So it's not like I'm going to start drawing my range from here. This is incorporated in the range. I wouldn't call this incorporated in the range quite yet. I don't even think there's going to be a lot of volume here. So it doesn't matter really if you were to start it right here or if you were to start it right here. I'm going to add this portion here. I just want to see, because maybe sometimes we do get a little volume imbalance here, a little low volume node. This is where the range is going to be, okay? And we can see that 70% was in this section right here, okay? So I don't know why control is not working, but from here is where we've had 70%, okay? And I'm going to go back for a second. I'm going to put this on not extend right. Okay, good. If we were to take a look at this moment here, okay, and we were looking at this right here, a lot of people are looking at this and seeing that this is probably a good fade on the SMH, but are seeing we had a push up. Let's draw it. And this was just supposed to be a quick, overview on what I'm looking at. We had a push up, we had a pullback, we had a higher push. This looks like a higher low to a lot of people, right? We have a low, we have a higher low, and then we go and we break this high here. So throughout here, I wouldn't expect anybody to really be getting long up in this area. I mean, I guess they are with a stop below here. But once we didn't have, the buyers step up in this compressed area here, the buyers didn't want to step up. They fell back. They didn't want to aggressively shoot lower. So we didn't really have a lot of sellers step up. It was just that buyers did not find value up there. This we can anticipate is going to start becoming a range, okay? And we can see that 70% of all the trading volume for this area, right, was in this range here. So while we are understanding that we're bullish up here, we have to be understanding that we could potentially have a pullback at least to the value area high. Now, I would not suggest a short just because you see, that we're starting to create a range. But what you can do is go to lower time frames and see, okay, we can find somewhere where volume's picking up. This is where you're going to find the inefficiency, okay? And I don't know if it's going to play out on SMH, but this is the kind of stuff that I look for. So we have volume area high or value area high here. We have a lot of trading volume at this point here. So, and as you can see with the point of control, I like to target the level like right above it because I don't want to risk going all the way down towards this high volume node because that's where a lot of trading is going to be. I would suggest right here as the maximum take profit for your trade there. Really, it's value area high. But basically for our inefficiency, we're looking for some sort of pocket and we don't know where it's going to occur, but we want it to be in this area here because what we're looking for is we want to see, okay, with the understanding that the buyers really should have picked up from this area here. and the breakout at this point did not have any follow through, and we reverted back to the range. So this tells us right away that nobody found value at higher prices here. Buyers did not accept price up here. Okay. So when we return lower, they are saying, okay, this is the range, this is the safe area where we find value. So the next time we come up here, just because we break above this high, we want to see, okay, do we want to accept value? So if we were to make a range here and start creating a range with one of these, volume profiles that starts showing balance in this area here, then we're fine with taking a long, so long as we see a breakout above here. And then we look for the inefficiency to trade here, and our trade looks like this blue box here. We're not going for some huge, massive home run, understanding that the higher time frame is on our side because this could be the basing with the breakout, but we're not looking for simple highs like this to go long, and we're not looking up here to go short yet because we could potentially see volume build here and break higher here. What would really give me that AA plus to go size in heavy with this long and have full conviction is if we were to have a push lower here and see that no one found value below the range that occurred here, and then we potentially have a move higher here, and then we're buying up in this area here. Not really in the middle, not down below, okay? And that's how you have to anticipate price moving, just from this. You have to be able to see that we didn't accept prices here. That doesn't mean that we're now bearish. It just means we're going to revert back to the range. And until, and this is a little pop that I'm talking about that I'd want to see in this range here. But I'm kind of getting ahead of myself. We are looking for the inefficiency to target the value area high here with a trade setup somewhere down here where we'll see some accumulation at this point and we catch the trend down to value area high. And why value area high and not lower? Because we could totally see a bounce from value area high. This becomes a bigger range that we accept prices higher to eventually push us. We just want to get that trade in the inefficiency. So if we look here and see what happens on SMH, and I have no idea what happens, we could potentially just gap down. So I wouldn't really call this that much of a range, 10, 15. So it was about 2 days of a range, and we haven't gotten a value area high yet. Okay, so we're still targeting that. We potentially want to see, I don't know where the gaps are. I didn't really see. Okay, I guess the opening for Tuesday's right there. This is Tuesday. We could potentially just run down there today. I really want to see what happens. So we gap up. Okay. So we got to value area high-ish, and we want to see at this point here on this opening, this is how you day trade the SMH, and this is how you trade gold and everything. So if this was any other market, I would be looking at it the exact same way. Okay, we want to see now how price reacts to this old range, and I didn't even draw my volume profile, and it's going to be from here to this leg here. Okay, because this is where we broke out, and we have all the volume traded here. Okay, so this is what our box is going to look like. And on Tuesday, that's kind of a riskier trade. That's a good trade that you want to see. I mean, you're really not on the wrong side because at no point in here are you trying to be a buyer. Okay, you're not trying to buy into the gap here. You see that we developed value, and then people did not think, they thought the price was expensive up here, and they want to trend down. Okay, and you look for some sort of compression, right? These were just pullbacks really to get short, but you're looking for pullbacks and compressions to go short. So how we're looking at this now is we want to see how price wants to return, because all of a sudden, if we start whipping up higher and higher and higher, we could potentially want to go revisit this value area here and continue trading in this range. And then that's where you want to start looking for bullish prices. But until then, we're kind of in the middle here. You want to be careful. We're really trying to find a way, if price, they didn't really accept this at all up here, to get us back down into this range here. So with that being said, from this area here, what I would do, and these are just tools that I use. You want to set an anchored VWAP from the point of capitulation, which was really right up here. So as you can see, we were in the range, we had a gap down, pulled up, chopped around, and then we broke lower. So this is the point of capitulation where the buyers just gave up and we started going in the opposite direction. What happens is a lot of people use anchored VWAP, and if we're below it, they're bearish. If we get above it, they're bullish. As long as the VWAP's under, we potentially could see a fake out right here. And I know I'm getting really in depth on the SMH right now. I was just trying to go over, how we look for inefficiencies. We want to try and we do not want to be long above this anchored VWAP at this point here, okay? So that's first off. Second off, we want to see if maybe we can create a range and break lower. It's all about creating a range and finding value below. Okay, now we've broken below anchored VWAP, but we're being careful at this point here. So we want to see from 9:30 open on Wednesday, we're going to put another anchored VWAP from there. And we are below the anchored VWAP here. We're below the anchored VWAP there. We have sort of a range here. If this were to come up to this area, right, from here, if price was to come up to value area high and start accepting prices here, this is dead to me, and we're going to chop around in this range. If it would let me control it, it won't. This looks good. I want to see maybe if a trend line can get broken, but we've now developed our range, and we want to try and get to this level right here somehow. And all we're doing is we're looking for confirmation to go short. This is not confirmation yet. We want a good candle break below 9:30. See how the body's lined up like this? That's a 1 minute. I don't really like that. That wick looks kind of like a fake out. We're getting really small right here. We have an inside candle. I'm short on this area here is how I would play that, with a stop above this candle here. So my alarm just went off. And I don't even care how this trade plays out. Like, really, it would probably look something like this. I'm probably not going to hold it until here because we usually have two setups. We have the early setup where you get the nice clean flush, and then we base for a while like this, and then we get that initial push. But you have to take this setup 100 out of 100 times, and we get the stop there. We get stopped out at this point here. That is what I didn't really want at that point with that small candle. And we are right back in the range. And it's fine. I mean, that's how you have to take the trade. Sometimes it's going to work. It's based off a series of trades. And the sellers did not want to step up in that area right there. But you have to take that trade. And we're back in the range. And I would not be looking to trade this for the rest of the day. I wouldn't be looking for any kind of shorts. And this is just going to be a longer basing period. Look at that. So you don't... Okay, this is a perfect example. Perfect example. This was supposed to be the move. And when you see something like this fail, that kind of, if you stayed out of this trade, you can fully expect that those buyers are not stepping up. There was nothing in here for buyers to step up. The only thing that happened here was sellers did not want to send this thing lower quite yet. But no buyers want to get in this area. And you just sit in this range. Look at this range. I even said we were probably going to sit in this box for the rest of the day if those sellers didn't step up right there. And it's not that you're wrong. It's not like you're thinking that, oh, is this FOMC? Okay, well that explains why the sellers didn't want to step up at this point. Yeah, FOMC will definitely shake a lot of stuff out. Okay. That's what I get for trying to go in depth on something that I was not looking at. Okay. Let's just go back here. Okay. Let's quickly breeze over these. So we have our range, and we're at value area low for the SMH. If we potentially see basing in this area right here, we must be cautious that we could return back up to the range higher. We definitely need to be cautious of this low volume node here. If we were to return to this, I am taking my chances that this low volume node is going to hold and return us back to the range, at least to value area low. No way am I looking for a breakout down here and basing and trying to predict the breakout before it happens. So that's first off. We could see a push down on SMH and return back to value area. So, yeah, that doesn't really make me bearish on MNQ. Oh, there go my glasses. Let's go ahead and just do everything from scratch, okay? Capiche? Range. We have our range developed. That we are just sitting in. Now, let's think in terms of psychology here. Anybody can pull this up and take a look at this. This is what makes good traders elite and bad traders bad. If you were to look at this and say, okay, we came from value area low, we dipped under it, and we returned to the range, what is most likely to happen? If you give them a multiple choice answer, they would probably say return to value area high. From looking at this, that would mean that we're semi-bullish, at least for now. We went from value area low up to the high, high, low, this to me does not look good bullish wise. When it's too obvious that we have higher lows getting developed, that makes me question. I think we're just filling in these low volume nodes really. Because bullish to me, we are getting really tight up in here. Super tight. This makes me not even reluctant to trade tomorrow or the week until we get a break somewhere. Because this just looks like pop and fade territory to me. I mean, if we get smaller and smaller and smaller, that's why just looking at this from the bullish perspective, from coming from below value area low, why coming up to value area high doesn't really intrigue me. I'm so risk averse now. Instead of trying to get that initial breakout in this point here that might expand up to here, I am so much more like inclined to look for basing up in this area if we do break out and continue to try to play the continuation from there. But yeah, this is just getting really tight. The clean trades that you want to look for look like this. And I think I went over it on one of my where we're below and we haven't retested this area too many times, value area low. Um, but we're in an established range. We create another range down here and we get a nice pop all the way to value area low at this point, and then you look for the trade back into the higher value area. And I think we had a low volume node up here that's been traded through a lot now, so it's closed up. But that's what you really want to look for. This is not good. And who knows, maybe someone takes the breakout here and they get the flush down. But you just have to be cautious at this point. If we were to break this pendant here, or whatever you want to call this declining wedge, we have the chance of returning back to value area and just staying in this. So that's kind of off to me. Let's see. ES kind of the same way. Is this extended? See, now with ES, this is a little different. With our range that we had here that we pushed above, as you can see, we built value higher and we're continuing to stay higher above it. Which looks a little cleaner to the upside. But I mean, same concept here. I would just be cautious of trying to play that break above. If this had pushed down a little lower, I would like that, but this higher low right here into the accumulation that we're getting. See, like technically this should send us higher here. Not a fan, okay? With that being said, we have a clear low volume node here on ES. So I am not short until we're below this area. In longs, I'm not a fan of being long. What I am going to do is I really don't want this declining wedge up there for me. Yeah, I'm just neutral on both. Wouldn't be short until we get below this low volume node. And it's not that I'm looking to sweep these lows right now. I'm trying to see, is there a reason to come down there? If we were to pop on visible range. Yeah, there's just no volume down there. I mean, we have that all the way down there. If this range, it would be really bad for markets if we were to Um, we tried to find value down here, failed, came back, didn't want to come near that area. Um, so that's how you have to think about human psychology. People have their stops at this point here. I think we could definitely, it is not out of the realm of possibilities to come visit this area where we once had value developed. I mean, right here we tried. They didn't want anything to do with it at this point. So people who are late to the party here think that it's fine to put their stops there. Um, yeah, so if we were to break this low volume node here on ES, I would imagine we would go make our way to this higher value here. Lower value. You see on NQ, if we have the same, it would be down here-ish for NQ. Oh, boy, I'm tired, man. I'm tired, boy. And it's not as prominent on NQ. It's kind of like a trendy scenario. See, we only have one low volume node on ES. The one on NQ, we are staying below at this point. And I'm not too concerned about these here. I don't think these are going to get swept. I think that we might come down here and develop a range lower in this area here. But these could totally stay intact. I mean, for a minute. But we're looking for a way to get the inefficiency at this point. Once we find a range here that breaks intraday and we can target down in this area, because that's pretty much why I lost a lot of money for a long time, is because I would look for the break of this to then target the break of this, and by then that was too late. And then if we broke this area and I was looking for continuation, like, oh, if we break this level, that's really bad. Well, when you think about it, if volume is going to start getting developed here, the pop below those lows are just going to be brief and we're going to return right back to value. And you need to be looking for the inefficiency from here to here. I know this is very hard to comprehend. And I'm perfectly aware that I could wake up in the morning and we're at fucking 32,000 because that's how these markets have been for a good bit. This is kind of inefficiency that I'm talking about that I didn't get to take part in because they wanted to screw me over while it was a bank holiday. But when we left this range here, we were looking for higher prices, which means we're looking for consolidation into a push higher, which we got overnight, of course. But, yep, gapping up. And you can see, just like that inefficiency there, if we were to draw from here to here, look at all of this value here, and you can see the biggest point, most prominent point was in this area right here, okay? So from here, we're looking for a way to trade back up into that area. But before that, when we break below this range, we're probably going to go test the point of control at this point here. And damn, that was a crazy wick. So we might sit in this range for a bit. Yeah, we had a lot of volume up in this area. Low volume notes galore, boy. This to me is not screaming mean reversion, but we are too far gone now to trade the long setup really until we base out and find another range to break above, because this is where you want to be getting in. The breakout here and then trade until the consolidation at this point here. This is where you want to be managing your trade. You don't have to close it, but you really want to be managing it. So, okay. Let us see where we want to look for gold in the upcoming. See, to me, this is the range. Boom, boom, boom. The breakout really didn't occur until this point here. All right. So we have this. So this is how we're going to be playing gold, really. We're going to have our value area high that we could potentially trade up towards. This high, to me, is not safe. We'll eventually go reach that. It's just a matter of when, okay? We tried to find value lower at this point here. I mean, so right now, I'm bullish on gold. Until when? Really, I mean, until we eventually return to value area high here, which is crazy because it's flip-flopped on the human psychology that has been taught to every single person trading ever, because they want to follow the trend until it's no longer like viable. Like literally for here, I'm kind of cautious on going long above here, but I know there's a lot of people that are bearish until this point, and then they're going to flip bullish at this point here. Wow. I mean, yeah, we could keep going higher to value area high, but that's, I mean, we could chop around, and then get to value area high. Me, I want to be looking for the long inefficiency up until this high here. And then I want to be out. And then when everyone gets long at this point here and we trade higher and higher and higher and we get above value area high, I want to look for shorts back into the range. I don't know how far I want to go. It depends on, you know, if we're trading up here, I want to look for the short down to here. So, yeah, gold looks good to go bullish. I don't know when this high is going to get taken. Big low volume node too. That's juicy to me. So we had our initial range, which really occurred right here, really. Yeah, pretty much occurred right here. Broke out, got basing. Wait 1 second. Can I be heard? Okay. And I know that I'm going to get flamed for my SMH analysis in the beginning and be like, why am I going to listen to this guy? He just fucked up the SMH overview. It's not an overview. I just I picked a random point and was predicting that's how the market is. Like, you have to take those trades the same way that I don't know at this point if this is going to become the basing to push us higher, is the same way that you don't know that the basing is going to fail for the SMH. Like, you just have to put yourself in the best case scenario or where the edge is in your favor and pull the trigger on all the trades and let the series of trades, let the winners be bigger than your losers, and you're going to freaking cash out. Got to keep that mindset. Okay. So what I'm doing now is I'm looking for any kind of low volume node. Point of control is another thing that I like. I am really bullish on gold for the next week and a half. I'm bullish on gold until we get up to here, really, up in this area. This is where you really want to start taking profit. Okay. I like the point of control here. I'm going to do one quick thing just to see. I hope if point of control is somewhere right here, when I pop this up on visible range, that is going to be so good, because what people do is they wait to see how we react to point of control. If we get over point of control because they use it as support and resistance, they're going to be going long there. So, and I want to be selling into that buying pressure. Point of control, reveal yourself. Point of control, reveal yourself. Where is it? Oh, wait, what? Develop, wait. No, we don't want that. We want this. Bam. Ooh. Okay. Uh, not a fan of that. Really. Oh, wait, what? What's going on here? Show me from here. Right there. Ooh. And okay. And I know what you're thinking. Well, you just did it to tailor it for yourself. No, well, no, because we're looking at, we're not really concerned about the range from here that trended up. So we don't care about the point of control down here for now until we start basing here and going lower down towards that range. This was a key area. If we broke this, I think a lot of people were super mega bullish, especially this area here. And usually in those key inflection points, we just end up chopping around after we get to those points because those are the wrong inefficiencies that people are looking for. And I know firsthand experience from getting my behind handed to me over and over and over. Okay, so I really like the point of control being right there. And that's because we're really concerned about this range higher to here. This trend up does not affect us quite yet. Really in favor of that, okay? So call it confirmation bias, call it whatever you want. Gold looks good. So how are we going to handle that? Well, every single day, we're going to look for a range like this, and we're going to see price bounce around like this. And we're going to look for 930 to open and a push down here. And we are going to be looking to buy these, right? Buy these pushes. Understand it's not going to happen in one day, so we're not holding it once we buy it. We're not holding it to the moon. Buy those pushes, as well as anything that looks like this. Let me get here. Anything that looks like this, we are going to be all over these. Boom. Boom. We're going to be all over them because we're going to be in an uptrend from this point, right? Up to here. Same way as on this downtrend. This right here, boom. We're understanding if, okay. This perfect example right here. We are trending lower. We understood that we're trending lower probably to this range down here. So when this range got created, the same way that for the bullish side, we're looking for value to develop higher and we want to be buying the breakouts there, is the same way when we got below this range here, we're looking for anything in here to send us short down to here. And this is the inefficiency, okay? And this boop, 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 is the inefficiency right there, okay? So I kind of just messed up with a lot of drawings, but hopefully after the 20 billionth video that I make, we'll understand what the inefficiency is. Okay, so control doesn't work. Okay, nice. What? Okay. Right, gold looks good. I don't really see any ranges in here that we could play. For now, we're just going to be looking for ranges to develop to go higher for gold. And when it's dark out, YM, perfect example of the range I just explained and that I just deleted. We found value higher and the breakout comes and we go higher. Now, YM was a chop fest and everything happened overnight in afternoon session, partially because it was a bank holiday. Don't get too excited on YM. Uh, I don't think this indicates anything of future anything for NQ or ES. We're pretty overextended right now. Um, I would almost consider this a massive range from down from there. Move this over to right here. Yeah, so we have this huge range. Very whipsawy. I think that's just how YM trades, though. Just freaking whip sesh. So the novice, the dummy, is going to look at this and say, well, isn't this a range now? Are we developing value higher? Maybe. Uh, I would probably bet my right arm that 90% we return back here. But for now, we're developing higher and we're bullish. So why stop that moving train? I mean, there's really no low volume node to return to right here. Let's see on the visible range. I think my mouse is about to die. We do have this massive pocket with no volume. You can't look at this and say most of the volume's traded down here. We're probably going to make our way down here, because that's what happens when people start incorporating the volume profile. They start putting their target here without noticing that if you removed everything, this is a freaking uptrend, dude. So you don't really want to try and pick the tops. What I do like is this. We have these highs here that people are going to be looking at. But if they start thinking that this looks like a fizzle sesh and it wasn't a true breakout, and they start trying to short into this, dang, okay, you know what? You know what? We have YM's really bullish, matter of fact. I mean, duh. I think maybe the point that I would flip bearish on YM, which could be an indication that NQ and ES do want to break lower to that range. It's one or two things. YM's going to lead it or ES and MQ is going to lead it. If ES and MQ end up trying to make their way down to here, I'm really into shorting YM down below this level here. I mean, we would. This isn't really a low volume node. There's a lot of stuff holding the Dow up. What are most people going to do? They're going to look at this break and retest as a hold. See, what I don't want to do is measure this. Oh my God, it bleeds into my value area. I don't want to measure this and say that buyers have to step up here. Oops. But if we were to break this, have a pop up, because technically this is how it's supposed to be. You're supposed to develop here. If you fail, you're right back in the range, which is down here. So we'll just have to see on that. Last one, crude oil. It's getting cold. I'm ready for bed. I think I was looking at this the other day. Yeah, just massive low volume node. And when it's dark yeah, see, I had already drawn this. I wouldn't find it weird if this thing trades up to here overnight. This is the inefficiencies that we're kind of looking for in a range like this to get ourselves positioned into something like this. And, you know, when you're looking on the minute chart, that's not that bad of a trade. You know, you break out, you get a compression here, and you get that trade up to this level. But we don't really know if that's going to be the range yet. It's a little too compressed for my liking to just get the pop through it. What I'd like to see is maybe something like this. And we go down and dip down back into this. Not this low volume node, but down in this general area. Because I mean, anybody can see this compression here and say we're playing the break. I would like a little long. I would look for some longs tomorrow if we're in this area, back up to the range. Yeah, I mean, we're holding this area nicely. So we'll just have to see. Bitcoin. Fuck you, Bitcoin. I wanted the long. Same thing for gold. I wanted the long up to this level here. It's pretty much the same thing. Look at Bitcoin. This high is what I was looking for on Bitcoin. And we got to it. It's the same concept. We have, please control. We have our range, right? See, we developed above it. Range, developed above it. Go trade up to this high. Why? Because it's up in this general area of our bigger range. That's what I was looking for on gold. We have our range. We'll trade up to. I mean, that's a pretty big high, but that's because the range is now up here. So we got some pretty good prospects going on here. Let's see. Why it's kind of a bad idea to be shorting up in this area, why I'm not looking for the fade up here, is because there's just too many psychological levels up here. Everybody's looking for sellers to step up here. If we start seeing price movement like this, I would like long-term high. If we were to break through up here, there is nothing stopping us from, well, I guess this range is stopping us. What's this range? I guess it is stopping us. Notice where I stop this. I stop it right here. Right here. Because we can see here, once we got up to this level, we started accepting price and trending higher. So, yeah, actually, this is stopping us. We want to see how price reacts if we get below here. Because, look, we're accepting price below this range. We broke through it. We're accepting price below this range. We don't have to go fill in. I can already tell that there's a big old low volume. What? Hmm. Okay, to wrap it up, very cautious of this range here for Bitcoin. Gun to my head, neutral. No idea. I don't really want to play in that area right there, long or short. So I'm not trading it. Crude oil, gun to my head. I have to see what happens overnight. Crude oil at this point in time, bullish. And what bullish is means that I think that we could potentially trade down if this becomes a range. Down to this area here. We might break below this low volume node and continue higher from there. From here, continue higher. So that's why I'm saying bullish. But if we open up in the morning, we're up here. Neutral. And what I would do is I would see, okay, how are we respecting here? If we were to open up, come up here and immediately dump lower, I'd be kind of cautious of going long or short because I would be looking at this area here, this value area that we would just sit and chop in this range. But if we were to push, if we were to come in here, chop around, and then get a move higher maybe on Tuesday or Wednesday, I would be looking for the minute chart to get that compression. Boom. And up to here. And then I'm out. Okay. Crude oil, bullish. Next. I didn't even look at the Russell. Russell kind of scares me. Because we just... yeah, I don't really want to look at that right now. YM. If we fail here, I'm bearish. If we break higher, I'm bullish. So, I don't even know. It's not neutral. It's just... that's just the game plan for that. Gold, bullish as you can get. So bullish. Bullish. So bullish on gold up to this level. From there, no idea. MNQ. Same thing. Semi-bearish. And that's just because of ES. ES below this low volume node, we could potentially break here, find value down in this area here. That's what I like. If I'm shorting ES. Really, my two plays here are going to be gold and ES and Dow-ish. Crude oil might have a nice little value play, but Bitcoin, well, I mean Bitcoin too. I'll just take these off. Not looking at NQ at all whatsoever. That I don't like what's going on in that area. Yeah. So we are sitting at 2,700 from the, what was it, 3,000 balance that we started with. I'm gonna look to increase the equity curve on the account balance. So yeah. Hopefully we got a good old week. coming up. Matter of fact, let's go ahead and look. Holy moly. There's no news next week. Wow. You know what that does? That just further emphasizes the fact that this is going to go nowhere. These ES is not going to go anywhere. I don't know about gold or crude oil, but before I even looked at Forex Factory, this to me just screams consolidation. Like in here. We got CPI. The FOMC later. Shit, I hope we don't have to wait till July 9th to return to this range down here. Yep. All right. That wraps it up. Peace.